FOMC day is never easy to trade. I did trade it, and I usually do trade it, but it's not recommended for new traders. But let's do this for today's video. Let's go through today's price action, what it did, what it hunted, maybe some rules that you can put into place for FOMC day. Then I'll go through my two trades. You can see I had a winner and a loser, which netted me just under $1,000 per account. And let's maybe do a quick review of what price could do tomorrow and for the remaining of the week. So starting with today's price action right here at 9:30. What price did before this is, again, I had some key levels here that all of you should have every single day before the 9:30 opens, right? So that's pre-9:30 highs and lows, London highs and lows. Okay, so here are my London highs. Below I have my London lows. And I don't have it on this chart, but pre-9:30 lows as well, which is this low right here, okay? So what are pre-9:30 highs and lows? It's the highs and the lows, or the range of the high and the low between 7 to 9:30, okay? Very important. You'll see price digging through these PD arrays over and over again, or these levels of liquidity, sorry, over and over again. And I do have them all illustrated here. And let's kind of walk through what price did earlier today. So price printed a high during London. It came back lower. It came to this green line, which is the upper quadrant of the daily wick. You can see here rejected. It also created a lot of sell side liquidity here. Like these are smooth bottoms that are going to be taken out later. You can see right now price is digging into that. During from 7 to 9:30, it created relative equal highs and relative equal lows. The reason why I'm seeing this as relatively equal is because a body never closed below this low. And as of ICT, of what he said either a week or 2 weeks ago, this kind of closure is still considered a relative equal low or liquidity sitting below it. So I did have it marked out here. And this was one of my targets for one of my trades, but we'll talk about that in a sec. Right before 9:30, you can see price kind of moved sideways. It created some minor buy side liquidity. And when price opened up at night, and also created minor sell side liquidity here with this line that I have here. And when price opened up, it hit this high at 8:15, reversed lower. It took out relative equal lows. And you can see here how it's had troubles breaking the RTH high here. And what the RTH gap is where yesterday's price closed at 414 and when it opened today at 9:30. Again, it's another PD rate you can use. I'm not going to talk about it much in this video, but what I want you to note is on the opening price, you can see how price struggled after taking liquidity to push lower. I did take a trade here and I got out of break even. I don't have it marked up here because this high resistant liquidity gave me a bit too much anxiety during the session, but ultimately price did push up. It would have been a nice 2-to-1 to London highs, but again, I didn't hold it. It broke me off at break even. And then once price took pre-9:30 highs, London highs, it created its first presentation fair value gap at 956. This is very important. Price pushed higher. It used it to push price even one leg higher, and then it collapsed. It collapsed lower. It created a break of structure. So there was a market structure shift right below this candle at 945. So let me draw it in for you so all of you can understand where that is. Okay. And then price pushed back lower. It rejected the upper half of the RTH gap, or the very high of it. And then it started digging into the bearish breaker, which is this red line right here. Okay. And right when it rejected it on this candle, I took a 2-to-1 short targeting pre-9:30 highs and these relative equal lows here. What price decided to do, and this is again very important, target was at the relative equal lows here, and my high was one tick above first presentation. And I thought this was enough protection. I was a quarter into the second fair value gap. I was above this fair value gap here, which I have marked in red. And you can see here price, it started bouncing back and forth. And the reason why is because it wasn't the right time to trade. We weren't in a macro. You can see we had a macro before us and after us. I was trading between these two macros. And you can see what it did here is it just tapped me out of my position. This was a heavy position short. And then price started rejecting the first presentation fair value gap of today. And the moment I saw this candle here go up and push lower on that next candle up, I did take a position short at the mean threshold of that wick there. And when price broke down here, I did take a short when it punched back into this first presentation. And I took ultimately a 5-to-1 targeting the very first low here on this ride higher. Again, I saw relative equal lows below us. I took the lowest hanging fruit. It was a quick 5-1. My initial target was lower here, but if we kind of read price on what it did after taking these lows, it created we had a bearish order block right here, which formed with a fair value gap. Okay. We had a suspension block form right after this drop lower. So on the close of this candle, the suspension block has been confirmed after taking these lows. And having your stop loss above this bearish order block, that would have been smart. So at least you're 1R in profit. And what price did is it pushed back into this fair value gap. On the next candle, it fully respected the suspension block, and then price just collapsed lower to these lows here. Okay. And what I want you to take out of this is, number one, notice how price is a lot cleaner the closer we get to these macros. What I realized in the past couple of weeks is sometimes these moves start happening right before the macro. Like you can see here at 1037, 1038. That's when it starts happening. And usually what the macro does, it starts printing the final legs of that move to its target. So again, the closer to these macros, I realized the more high probability your trade is. And other than that, I was happy with my management. This was almost a 2R loss, and then I took a short going down. And right, so here is just a small screenshot of where I entered, where I got stopped out at, and where I went lower. And again, it could have been a 12-1, but again, I was already in negatives off of this trade. I did want to make it back up, get another win day for Top Step, and I just closed it at the lowest hanging fruit being a 5-1. So hopefully you guys saw this real time of what price did and how it tracked, but it's just heading for either inefficiency or liquidity. And you can see it's done all that here. And one last thing here that ICT kind of talked about is when you have relative equal lows and you have a wick like this, where it doesn't close below these lows from a body perspective, just a wick, price usually tends to head back into here and actually close below. So you can see here, price headed back higher, went to the suspension block, dilly-dallied sideways, and then eventually it closed below these levels on today's 11:10 candle. So just because you see something like this, it doesn't mean the move's over. I did mention to a couple of my buddies that most likely we will receive one final push lower. And a couple of minutes later, that's what price did. Price right now is approaching the wicks here of the quadrants of yesterday's daily candle. So if you are watching this video pretty close to when I post it, do watch how it respects these and reacts to them, as it's very easy to find high probability fair value gaps amongst these quadrants. Looking into what we can anticipate from a daily perspective for the upcoming days is we have been in a continuous uptrend here. Okay. So we've had a drive higher. This is the second drive higher for the second week in a row. And at some point, price should be turning around again. Do not pick the tops, even though today I shorted. It's easier to long than it is to short. If you are shorting, you have to have 100% conviction that all the PD arrays are aligning correctly together. We do have this gap right here. This is a true volume imbalance, okay? Or liquidity void, sorry. Price will head here. This is going to be a future target for us, but we do have to see a top out before it starts heading lower here. But again, this is going to be a high probable target for maybe later on the week, if not early next week. But again, do not try to catch the top. You have to really understand when it's going to be slowing down and start attacking that soon. And to be honest, I think a really good metric is once we start seeing these daily fair value gaps break and retest the downside, that's going to be your confirmation that price is going to want to head lower. And this is when you start holding these larger positions. But on that note, hope you guys learned something. And if you guys enjoyed the video, if you drop a like and a sub, and I'll catch you guys soon.